All right, y'all, weekend is over. Back to work we go. We got some more money to make this week, don't we? And boy, by the way, speaking of money, how about that beautiful slingshot reversal we talked about in last night's video? What a fantastic way to finish off the week last week. We got the reversal, the breakout pullback, so many ways to make bank on Friday. Hope you guys made some money out there as well. Now, boy, we have a big week ahead of us because we might have a government shutdown on Wednesday morning. The deadline is tomorrow night. Now, what that means to us traders, obviously, is we're going to get a bunch of updates overnight, tomorrow morning. Every update out of Capitol Hill will give us more volatility and more ways to make money if we are prepared. So I have three trades, three strategies I'm watching for tomorrow. I want to cover those entries, exits, give you guys a game plan to make some money before they shut down that government. Hopefully not, but in case they do on Wednesday morning. So charts are ready. Enough of the intro, right? As always, thanks for tuning in and watching my videos. Let's dive in though. Get ready for a possible shutdown on Wednesday morning. S&P SPY ready to go tonight. NASDAQ triple Qs are ready. I have three clues on these charts telling us where I think the money is made tomorrow. The first clue is right here on the hourly time frame. I like to use the 60-minute time frame, the hourly chart, as an overall directional filter. And you can easily see right now the buyers are in full control after that beautiful reversal we talked about last week. So one big clue here, the buyers are in control of momentum. I would also say too, notice the all-time highs. They're right above us here on the S&P and SPY, just above us there, the NASDAQ triple Qs. I mention this because oftentimes when we get relatively close to those all-time highs, it almost acts as if it's a psychological magnet that kind of draws that price higher. So we'll talk about that a bit later on tonight's video. That's one big clue though here on the hourly time frame. The second clue is in the calendar for tomorrow. We have quite a bit to think about tomorrow. First things first, we know we got big news tomorrow at 10 o'clock Eastern time. That JOLTS report, we know from J-Powell last week, they are watching the jobs market, the employment reports very closely right now. And that JOLTS report is a really big deal. That job openings, layoffs, and transfer survey that will likely be a big market mover for tomorrow. So be aware of that. The second thing on my mind for tomorrow is not only the end of the month, but it's also the end of the quarter. And we know that towards the end of the month, towards the end of the quarter, traders take bigger risks. They take bigger risks. We definitely expect to see some volatility kick up tomorrow. And that goes right along with the third thing on my mind tomorrow, which of course is that government shutdown. Again, all the crooks on Capitol Hill, they've got till midnight tomorrow night to find a way to extend that government or the financing for the government, or else they'll shut things down on Wednesday morning. And like I said earlier, that will probably lead to some volatility coming from headlines overnight and tomorrow morning. And we're going to cover ways to trade that volatility here in tonight's video. So end of the month, end of the quarter volatility, government shutdown volatility, JOLTS report volatility. It could be a wild ride on Tuesday morning. Hopefully it is for us day traders here. That's my second clue. Third clue now is over on the tick charts, the faster time frames. Remember, I like to use the hourly chart as direction, but these tick charts make entry timing a lot easier. And by the way, that is a 7,000 tick chart in the upper left-hand corner. And if you're tuning in and watching for the first time right now, welcome to the channel. That is the 21 EMA. It's the only indicator we need to make lots of consistent, repeatable profits. Two clues on these tick charts. One clue, strong move going higher. Now, why is a strong move a big clue? Because anytime we see a strong move higher, we expect a deep pullback and a retest of that high. Just like if we saw a strong move lower, we'd expect to pull back and a retest of that low. Right now, it's a strong move going higher. We expect these buyers are trying to run this thing right back up to retest those overnight highs at 67.36. That's a big clue, but I think the most important clue right now are three ranges. Range right there, range right here, range right here. All three of these ranges are important. Why? Because the first one, probably the most important range right now, is that range right there. It's a bullish market into a range. Now, what do ranges do? They love to rotate. We go below the range. Buyers now want to rotate back higher and complete what we call a pendulum swing. Keep your eyes on that pendulum swing going higher. This range right here, now this is more of a bearish range. However, what do ranges do? They like to rotate off the low of that range. And you combine that with this larger range overhead, and it's more likely now for this to basically slingshot off of that low and make that run going higher. I would also imagine too, if we could break out of that range, I would imagine a breakout pullback off the top of that range might be a good trade for tomorrow. We'll talk about that in a few moments as well. My favorite range though on these charts right now is this range back here. That little range we saw over the lunchtime session on Friday afternoon. Now, why would that range be important? Well, because as I said earlier, whenever we get a range breakout, a breakout pullback is very, very common. So let's put all of these clues together. We know we're bullish overall. A strong move says expect a retest of that high and these ranges. Breakout pullbacks off previous ranges and range rotation. It's very easy to see. I would love to buy a bear trap down here. Get underneath this range because remember, we're bullish overall. If I can get a run lower here overnight or at some point tomorrow morning, this will feel very bearish. But again, if you understand how breakout pullbacks work, if you understand how range rotations work, this is a horrible spot to be a seller, and therefore it's a great spot for a bear trap. Exactly. What I'll do is I'm going to wait for price to pull back and look for what we basically call a two-try bear trap. Let the bears try twice. Remember, higher highs on this entry setup. Once those bears are committed short, now I know where their stops are. Now I know where their pain is. And now I can know where I can buy into those stops to fuel that move running higher. Again, in our video classes, we call this a two-try bear trap. Now, where's the market want to go? It wants to rotate, right? The amount below the range, the amount above the range. We know now where the market now wants to go. Perfect. Let's now add to our winner. As it begins running higher here, look for a shallow pullback that doesn't pull back all the way to the moving average, followed by a higher high in price. If I can get that add-on trade setting up, I'm going to add more to that winning trade. It's a bear trap, it's an add-on, and we're trying to trade that rotation going higher. Now, one variation of this, we don't always get that bear trap down there. So be aware, a lot of times what happens is it'll run lower, but there's so many buyers down there, this isn't fooling anybody. It just goes whoop and runs right back up again. Because again, that strong move higher, it wants to retest that high. So if I don't get that bear trap down there and I get a strong bounce up off that low, I'm going to look for a very simple adjustment. We call this a V bottom trade. Very simple. If it V bottoms off that low, I do not want to chase after this. What I'll do is I'll find a trend line. Off the high, I'm going to bring that trend line down off that low. That finds a channel. Then I look left and I find some prior swings. The goal is this. I want to get in off the first test is the best test, and I want to do it underneath a prior swing. Again, these V bottom trades, the best ones almost always will be just below a prior swing. And again, first test off that channel. This could be a bear trap. Like I'm showing you here, it could be a failure pattern, a pullback combination trade, a strength trade going higher. Any of the entry tactics you guys are learning in my free video course can easily be applied off the first test, off the low. Which reminds me, by the way, if you're here for the first time right now, I know, a lot of you guys watching right now, you guys know these patterns already. You're making money with these already. But if you're watching for the first time right now, this might be a brand new language I'm speaking, a brand new strategy. Don't you worry though, I teach this entire system, all these entry tactics in my free trading course. In fact, I have a ton of examples of V-bottom reversals, bear traps, add-ons, all included in my free video classes. So what I'll do is I'll put a link up top here for you, upper right-hand corner, hit that link that popped up there, take that free trading course because the strategy you'll learn In that short video series, we'll teach you a simple trick we use in our members trade room that literally tells me exactly where to find the winning trades each day. More importantly though, let's face it, we make our money by timing good entries. So I'm going to teach you my 4 favorite entry setups in that free video course so you can time better entries, get your confidence back in your trading once again. Guys, bottom line right now, the markets are way too good right now not to be making consistent profit. So if you're still missing the best entries, if you've lost your confidence in your current trading strategy, what are you waiting for? Hit that link that popped up there. You're going to love that free trading course. Everyone loves all the trade examples I include in that short video series. The best part is it's completely free for you. Also be aware too, guys, I'm going to put below tonight's video, I'll put all the important links you need to learn the roadmap. I would definitely start first though with the free video course. Most folks start making money all on their own, all from that free video class. So start there first, get your timing right, get your confidence back in your trading, then come join us in our trade room. We trade together every day, 8 o'clock Eastern time. It's the place to be each morning. I'll put that link below as well. And if you're on Twitter or the X platform, I post a ton of charts and videos and mindset stuff during the day in between these YouTube videos. If you're on the X platform, give me a follow. Again, all the details you'll need to learn more, hopefully earn a lot more, are linked within the description of this YouTube video. All right, so now you know where to go to get more information in case you're stopping by and watching the channel here for the first time now. Now, where did we leave off? That's right. We talked about running lower, bear traps down here, and running that sucker back higher. Now, I do want to talk about if we go higher here, because as I mentioned earlier in the introduction, we have the all-time highs up there. So we might get some good news about the government shutdown, and we may see this thing sprint towards that all-time high. There's a couple different trades I want to talk about as we go higher here, ways to buy it and ways to sell it if it backfires on those buyers. We're going to cover that in just a moment. But 2 more things I want to talk about. You know, for example, we oftentimes will see that run lower. We oftentimes will get our bear trap down here, bears once, bears twice, and we'll see the price will jump back higher for us. I will oftentimes get a 1-to-1 first target, move that stop up to my point of entry. It's a winning trade, and I'm looking for some follow-up trades. But unfortunately, sometimes what happens is the underbelly of that range will hold as resistance, and we'll see another leg going lower. Now, this is very important, so make sure you pay attention. There's something we call the money zone in our trade room. The breakout leg of a trading range is always a measuring leg. Okay, so once we know how big that breakout leg is, if we don't get that run going higher here and they hold the underbelly of that range, the size of that breakout leg can then be used as a measured move down just below that low. The bottom line is this, guys. Anybody who sells up here, where's their profit target going to be? It'll be one of 2 places. It'll be either the low a day, that low, or it'll be at that measured move. The bottom line though is when they run this thing lower here, this is going to feel like a bearish reversal. But remember, this is the tick chart. We don't use the tick chart for direction. We use the hourly chart for direction. And that big move higher we saw on Thursday and Friday last week, we're definitely needing more than just 2-legged move going lower here to call this a bear market overall. So like I said earlier, if this is not a good spot to be selling, right? It may feel like it is, but again, the higher time frame chart will give us our direction. Horrible spot to be selling, which means a great spot there for a bear trap. Anywhere below that low and that measured move area, this is the money zone, right? This is the bear trap money zone right there. So as always, we're not going to blindly buy this. We're going to wait for price to pull back, see if I can get some bears trapped in again. And the reason why I want to use 2 tries is because I want those stops, right? I want those stops to get squeezed and run that thing running higher. It's a bear trap. It's an add-on. It's always the same stuff over and over again because I'll tell you, once you learn what works, Once you learn the stuff that works, you'll be like me. You'll keep on pushing the same button over and over and over again. Now, we call these retest trades in our trade room, right? The market runs down, they retest, we bear trap them in, we add more to the winner, and we leave that runner because we know where the market now wants to go. All right, I got one more variation of this, then we'll talk about if this thing starts going higher here. For example, what if we don't get that big run going lower? Right? What if all that happens is, what if we ran higher, run lower, and then bounce back up just barely underneath that 96.25 level? Well, if you're a student of mine, you know the answer to this one already. But whenever we see a shallow pullback, I need to look for what we call a technical bear trap. It's very simple. As we pull back here, I still want to see sellers try once and try twice. But now I'm going to focus on getting in underneath a prior swing. Write this down. Anytime we see a shallow pullback, I want to buy as low as I possibly can to get my risk reward ratio dialed in. And to do that, it needs to be below a prior swing. Compare that to if we saw a strong run down. See, down here, I can be a lot more aggressive because now I can get a small amount of risk for a very large amount of reward, right? That's a great trade. I can be a lot more aggressive on that. But if all I get is a shallow pullback going lower, now you tell me, right? You tell me, as this begins to pull back now, 1 and 2, is this a good risk reward ratio? No, it's not, right? And therefore, it's not very desirable to other traders, especially experienced traders like myself and like a lot of you watching right now. This is not going to be a very consistently profitable trade. But if you're selective on this and you wait for price to get below a prior swing, now show me again. Now, how is your risk reward ratio? Entry signal needs to close right there. Now my risk is there. See this now? That's my reward. See, now that is a very lopsided, small risk, big reward trade. That is a lot more desirable, a lot more attractive to other traders. And because of the self-fulfilling prophecy, the more folks who take it, the better off it'll do. So a very small difference there. Remember this though, on a shallow pullback traps, technical traps, like I teach in the free video course. And again, if all this terminology is brand new to you right now, if this language is brand new to you, traps, failures, add-ons, don't you worry. Again, grab that link below, take that free video course. You'll learn all the terminology and you'll learn exactly how we take these trades in our trade room. Okay, enough waiting now. What if we run higher here? Again, that all-time high up there could be a bit of a psychological magnet. Let's talk about that over now on this NASDAQ. Now remember, on the hourly time frame, we use this higher time frame chart for direction, right? It's really all it's used for is direction. We don't want to get in the weeds too much. But remember, the tick charts, the lower time frames are for the entries. This is direction. And like we said last week, we had that kind of healthy correction, that three-legged move, that slingshot reversal. If you watched last week's videos, beautiful trading. One of the best weeks we've had in a few months in our trade room was last week off that slingshot reversal. The bottom line though is we are definitely bullish here overall. And again, that all-time high right there, that might be a psychological level. We'll talk about that here in just a moment. Now, before we dive into the tick charts and talk entry tactics here on the NASDAQ, if you're enjoying tonight's video, please help me grow this channel, will you? By hitting that like button, make sure you subscribe. I know we're all busy people these days. I appreciate you all tuning in and watching my videos. So as always, guys, thank you so much for the likes, subscribes, all the ongoing support. Thanks for sharing this with trading buddies you know out there. All right, I'm done wasting time here now. Let's dive in and talk about those tick charts here. On the tick charts, and you'll notice right away here, a 4,000 tick chart, slightly faster time frame than we saw earlier on the S&P because the NASDAQ is a lower volume market. What are you seeing right now on the NASDAQ? Strong move. Remember, anytime we see a strong move, pull back, retest of the high is a magnet right now on that 975.5 level. What else do you see here? This range right here, right? That range, I would say it's close enough right there. That range just completed It's rotation. It went up, rotates down. Where's it trying to go next? It's trying to rotate off that low. And again, usually the amount below, the amount above, punch its ticket, retest the high, take out that high, and maybe run all the way to those all-time highs right there. Another range you can see here, we call these bookend ranges in our trade room. Range up top here, range down bottom here. This range right here, very important, because now if we go lower, it wants to rotate, right? But if we go higher here, what's it want to do? It'll want to break out pullback off that trading range. That's a very big clue here. We'll talk about that in more detail here in a moment. And just like we saw earlier in the S&P on the chart earlier here, this range right there, right? That range, right? That was that range from last Friday. We break out, and what do ranges do? They love to break out pullback. I would say the breakout pullback zone right there. I would also say if things get wild tomorrow, there's a breakout pullback zone right there as well. Kind of a, if we do see a big move down, again, we are susceptible right now to headlines regarding the government shutdown. So think about that 43 level as a breakout pullback zone, the 47 level as a breakout pullback zone. If I had it my way tomorrow, again, we get that strong run down, get that bear trap down there and squeeze that sucker right back up again, get that pendulum swing coming off that high, and that will give us that big target up overhead. All of the entry patterns, all the strategy we talked about earlier on the S&P can be applied down here as well, right? So again, bear trap down here, a V bottom down here will also work very well. Love those V bottom trades in our trade room. The breakout leg, the retest, right? Remember the money zone, right? Breakout leg, measured move, that retest trade, bear trap down there. Love, love, love retest trades in our trade room. Again, all the same stuff applies here on the NASDAQ overall. Now, I mentioned earlier, the all-time high, it tends to have a bit of a gravitational pull towards it. So I want to talk about that if we wind up going higher here. What would be the best way to get aggressive on this? Or how would I know it's time to get aggressive on this? We'll talk about that here in a moment. One thing I do want to remind you though is that this range right here is the most recent trading range, which means this is the one now that's rotating back and forth here. So what do you think? Is it possible that we might run up and get whacked back down again? Again, we have to think there's going to be some jitters. There's going to be some anxiety, some nerves in the market here tomorrow ahead of that government shutdown on Wednesday. How could I sell something off the high? You know, for example, that range right there, that is a breakout pullback zone right there, right? Isn't it? Underbelly of that range. Okay, so let's say this now. We rotate higher and we get whacked right back down again off the underbelly of that range, and maybe for a pendulum swing back down again. How would I sell something like this? Well, there's two entry patterns I'm looking for. The first one's called a crown reversal pattern. As it goes higher, we'll start seeing the buyers struggle. They'll pull back. The buyers will try once. They'll go lower. They'll try twice. It'll be a lower low, a move right above that high. I'm looking for a strong red candle closing below the moving average. That's my signal candle, and that will give us our short running lower. Now, again, we know that markets like to rotate, right? The amount above, the amount below. That will tell us now where to cash that hopefully very big paycheck on that crown reversal pattern off the high, basically off the underbelly of that range up overhead. I don't hate that trade whatsoever. The easier one would be this though. The easier one would be a V-top reversal. For example, we may run higher here into the underbelly of that range, and it might get whacked back down and begin to grind going lower. And the grinder here is the giveaway. We know that trading range wants to rotate back down again, right? Okay, while it rotates, now draw that trend line off that low. Bring that trend line top there, find that channel, and what do we always say? Look left, find a prior swing, and whatever you do, don't miss the first test is the best test off the high of that channel. These are a whole lot easier on the emotion because what'll happen is it'll go up, it'll begin to grind going lower. I'm going to tell you right now, the giveaway on these is it slowly grinds, right? It pops up, slams lower, and slowly starts grinding back down again. That grinding motion is the giveaway to go find that new channel, and don't miss that short off the high. Now, a word of caution. We're overall bullish on the higher time frame, so all of these short side trades will always be, for me at least, you can do whatever you want with this, but for me at least, it's always a half size position, a quarter size position. If you're not making money consistently going with the trend yet, might be better off to go to focus on trend following first until you start putting on some counter trend risk on. But I do like those trades though off the high because of the situation with the government shutdown. Now, one big question though. Is there any way to tell if we go higher here? How would I tell it's time to get aggressive? Very good question. Look what happened over here. Okay, it's a good example right there. What happened right there? It's an add-on trade, right? It runs up, shallow pullback, higher high in price. Same trade talked about earlier on the S&P, right? This is the add-on trade I mentioned earlier on the S&P. We call this a technical bear trap pattern in our free video course, right? So most of you guys should know this pattern already. What is the giveaway? The giveaway is the separation. The separation is the giveaway. If we run higher here, we pull back shallow and make a new high there, right? Separation is the giveaway. That will tell you now. Again, as the all-time highs act like a magnet up there, right? That psychological magnet up there, this is the entry pattern. That is the entry pattern we look for over there. But again, be careful, right? Because as it runs higher, we may not get that. Be very specific about this pattern, right? It may pull back. Buyers try to keep it going, but they struggle. They try to keep it going, but they struggle, right? That's that crown reversal pattern off that high. But again, if they run higher here, shallow pullback and keeps going, okay, now we know I got good separation, I get the higher high in price. As long as I can get a good risk-reward ratio, as long as I can risk small to earn large up there, I'm looking for an add-on or basically a technical bear trap as we go higher before we take out that all-time high. Now, I mentioned earlier that this range right here, this would be a fantastic spot here for if we were to get, for example, if we were to get that breakout that separates off that moving average, whether or not we get an entry on this or not. But if we were to get a nice, strong, convincing breakout on this, remember that the breakout leg is always the measuring leg that helps us find better targets overhead. And anytime we see a range breakout, we then like to use that previous range for a breakout pullback. So as it breaks out, we're not going to chase after it. We'll take our trade here on the way higher, but then let's wait patiently here. See if I can get a two-legged pullback. Whenever I think about breakout pullbacks are almost always going to be a two-legged pullback. Not always, but usually they will be. Once I see a two-legged pullback, then I can go out, I can trap those bears in with that same bear trap, one try, two try. And again, as we go higher here, that same aggressive scalp entry long there, same one right here, right? Add to your winner as you go back up to retest the high. As you can see, I'm simply drawing on the screen right now. A lot of examples of those inside that free video course. So definitely take that link description down below there. Love that breakout pullback trade off of that prior range. In fact, if things really get good, I mean, if it really rips and runs higher here, we may wind up using this range as the breakout pullback. Runs up, right? Two-legged pullback, breakout pullback off that range as well. The only other variable right now would be if we spike up into a new trading range. And if that's the case, you know how to trade these already, right? We want to get below the range, trap those bears in, right? Use that previous range as a breakout pullback, right? And then again, it's a bear trap. And what do ranges do? They love to rotate, right? They love to rotate. Amount below, the amount above. It's a bear trap. It's an add-on. We keep on trading that rotation back and forth as we go. All right, guys, that's my game plan for tomorrow. I'm getting excited to top of the stuff to you guys here tonight. Now, speaking of tomorrow, too, don't forget tomorrow, 8 o'clock Eastern time, guys, the place to be is in the trade room. every morning. Guys, the easiest way to make money in these markets, come out and learn and trade along every morning here at the opening bell. I'll put all the important links you need to get started in the description of the video. Start first on that free video course, then come join us in our trade room, and we'll do it together each morning at the opening bell. In the meantime, guys, be well out there. Be nice to each other, will you, tomorrow, and make some money for me out there. Be here next time. Adios, amigos. Bye for now.